Okay, good afternoon, everybody. Bobby Piton here. As everybody knows, I've been out of town. I did a little speech in Arizona. I met with some folks about data with regards to digital canvassing, not just for Arizona, but across the nation. So I'm looking forward to getting that going. Hopefully, we can have at least the process in place by the end of the week for Maricopa. I have some follow up calls I need to make today. Yesterday was a very busy day. I'll be brief about that, but I did post something with regards to Pennsylvania. All my information that I sent off to the legislators of Pennsylvania, over 200 of them. I haven't even checked my email, folks. I'm just curious if any of these people have responded. But I just wanted to show what was happening with regards to the last names being, wiped out in various counties across Pennsylvania and so forth, so that people would know where to look. Good afternoon, Dallas. Hope everything's going well. So I did put that out there. The other thing I posted today, which is extremely concerning to the United States, the sovereignty of the United States. Hi, Jules. Is what's super concerning? It's the fact that right now there's a lot of properties possibly being bought in the United States across some of the most important areas of the country by the Communist Party. And this is a very, very troubling development. I do believe that we as Americans need to investigate this matter fully. This is why we, the people, need to take our government back on all levels of government, starting locally, because the Communist Party is using the money that we send them via trade dollars to purchase our properties here on U.S. soil, and they threaten to hurt. What I've heard, right? I don't have any proof of this. This is all just things that I've heard from people. But it sounds extremely credible given that how evil communism is and how evil these thugs are, that if they don't vote a specific way, that they're going to hurt them. Now, keep in mind, folks, it wouldn't shock me at all if some of these folks are doing things, they're keeping track of it. They probably hacked into our systems, the Communist Party. And as a result of the Communist Party hacking into our systems, they can, in fact, go and check to see if people are voting the way they're being told to vote. And this is the difference between a slavery-based system like that's satanic, like communism, versus a God-loving, freedom-based system like the United States. And so this is what we're up against, folks. There's no sugarcoating it. It's literally, we're in a spiritual battle, and we're fighting for the heart and soul of this nation. And we need to get these people out of here. The sooner the better. And I think that all these people should be, especially if they're not Americans, they should not have their visas renewed. Any purchases of property that are tied to people that are part of the Communist Party should be completely confiscated, as far as I'm concerned. And any of the people that are not American citizens that might have received the funding from the Communist Party should just get their costs back. I think that's what I think is fair. They're lucky if they get that, especially if they voted in our elections trying to undermine our democracy and try to continue to take control of this country from within, because there's been a lot of very evil people that have betrayed the United States, politicians from both parties, as well as our university system, some of the leadership in that, K through 12, Ed for Red, all that crap. All these people they need to be brought to justice at the appropriate time, because it's ridiculous. So let's talk about housing. Okay, so I'm going to share my screen here in a second, and it just turns out that I'm gonna change gears here for a second. I just wanted to get that off my chest. So thank you guys for letting me do that. And then I'm gonna go here. Okay, so let me take a look. You can see that the housing data came out today, and across, isn't that funny? You gotta love it. The 13.3. I always love to signal with their 33. But that housing prices were up 13.3% year over year. Now, I've read that the median price sale was up 20%. So this is the yearly pace, 13.3%. Prices were up 1.6%. Okay, all 20 cities rose, and that's unbelievable that this is what's happening. Okay, So you can see that in Arizona, ground zero for Maricopa County, 20% jump right there. 20% jump year over year. San Diego up 19, Seattle up 18. Now, folks, what does Phoenix, San Diego, and Seattle all have in common? You guys notice something? What do they all have in common? Well, they all have in common that they're super important for migration patterns into the United States. A lot of goods processed through San Diego, as well as I think we have a military base there. Seattle, ports from Asia. I think Phoenix, and I think Phoenix is where, if I'm not mistaken, that's where it might be close to where, I know the whole state of Arizona, but I think Phoenix is actually where Skybridge is, and Skybridge is the largest flow of goods and services into the United States. Wow, somebody just said they're listed their house for $440 and it sold for $520,000 in one day. That's what Stud Puffin just said. Which area is Stud Puffin? What is that, in Arizona or somewhere else? So anyways, we need to look at that. But what I think is possibly happening is there's so much money going around, that we have big issues, right? And I want to talk about, something. Wow, that's in Minnesota. We're going to have to figure out how this is going to be dealt with, because here's what I will say is, if you look, and I know I brought this up last week before I took off to Arizona on Thursday, but I wanted to show you these charts on Bitcoin. I know some people think that I'm kind of like badgering the cryptos, which I'm not badgering them, folks. I really don't have an opinion to go long or short. I'm just telling you that it's concerning, strictly from economics, from an economical perspective, because, Bitcoin, if you look at it, we're just going to go 1 year, and then we'll look at it year to date. So you can see right here, it was at 28,900, okay? $29,000 or so at the beginning of the year. Now it hit a high of like 64,000, and now it's back to 37. It hit 31,000, I think, last week. But I'm going to bring it up. I sound like a broken record. Take a look at this with regards to lumber prices. So lumber prices, year to date, even look at this. Year to date, lumber has gone from 700 to 1,400. So even after it fell, it cratered right here from 1670. Okay, with crypto falling, we could see lumber hit 1670, and then it crashed to 1264, and now it's back to 1453. These are massive moves, folks. These are commodities, but to have the volatility very similar to what's taking place with regards to the crypto market tells me there might be something to it. Maybe our markets, which commodity markets are much more illiquid. Okay, hold on a second. This is some kind of ad. Hold on a second. So if we look at corn, let me see here, year to date. Okay, so corn prices, once again, they started, I think at 1559. They hit a high of 23 almost, 1988. Now they're at 2007. So my point is, when you look at this across the board in the United States on all these commodity markets, you see a move with these things. Now, granted, I don't trade commodities. I've actually only traded commodities, I think, twice in my career, two different commodities. I traded natural gas at one time, and that was when the market was being cornered. So I decided to kind of wait for the crack, and I did something, I think, in natural gas. That was years ago. And then I did something with oil futures. But that's been over a decade. So I do know how to trade them. And the only thing is, it's tough to do both. And so I did try it. I was going to try to hire somebody at one time when I was managing money for a hedge fund, that had the ability to do futures. And we decided, it's too much work, in terms of trying to do it unless you're going to commit to it, because it gaps. Commodities tend to gap. They tend to fly around really fast, And so unless you have somebody kind of keeping an eye on things around the clock, unless you're going to just liquidate positions, it's not the funnest thing in the world to be trading. But it is fascinating from an information perspective to keep track of it. So my point is I'm keeping track of it because what happened in the past week, as Bitcoin fell, growth took off, growth stocks. So last week, the past 5-6 days, we've seen a really big rally in tech stocks. So let me just show you what I'm talking about, just so that you guys know I'm not just making things up here. Not that you guys think that. You guys know that I'm trying to set you guys straight. Just kidding around, but it's a line I think from a movie. Just set me straight. Let's see what's going on. So you can see right here as Bitcoin started to fall apart, the QQQ, which is the Nasdaq, right here, it was at 315. It was at 316.54 on Wednesday the 19th, and look at it right now. It's at 332. So this is an index of the 100 companies, right, in the Nasdaq. And you can see that this thing spiked off of the lows. A 16-point move, is about 5% off of the low. That's a really big move in a week for an index that's worth, this thing's probably worth 13, 14 trillion. All the companies within the Qs are worth about 13, 14 trillion. So keep in mind, Bitcoin falling by about, $300 billion or so, $400 billion. And the value of tech stocks shot up by at least 1.4 trillion in a week. It's an interesting relationship to keep track of. So then, if we look at that, we're just going to quickly look at the S&P 500 during that same week period, right? We're going to go back 5 days. 406 to 419 off of the lows is not that big of a deal because this is obviously the low. So if we go the beginning of the week, this is a little different. So if we go Friday, May 7th. To now, you can see that it's still down. So since May 7th, the S&P was 422. Right now it's 419, and so it got beat up pretty good. 422 down to 405, 17 points in a couple days, like really fast, which is 4% decline, just like that. And then it spiked back. And why am I pointing this out? I'm going to just show you the Qs real quick as well. Because these relationships of what's taking place in asset prices, right, seems to correspond. Oh, look at that. So the Qs are back to where they were about on May 7th as well. It's pretty interesting. May 7th, 334. Today, 332. So it dropped 317 from 334, now 332. So you can see that these relationships between the indexes, between the markets in crypto and as well as commodities are all interrelated. So the VIX is the volatility index. Once again, we can see that it spiked on the 12th. It hit 27, and then it kind of came back to 19. This is May 12th, but you can see on that low, VIX was really cheap. So people. This would have been a good tell to catch. This when VIX falls as much as it does, it's not a sign of people being scared. It's a sign of people taking on risk, and so that would have been a tell that to possibly go long. And then when things repriced, this is when people started shorting. Is what might have. It looks as though it happened. So right now things are kind of calm at 18.57, but now if we look at the 5-year numbers of VIX, before last year, before the virus hit, it was under 14. So it hasn't gotten exactly down to 14, but it's about 18. And 18, 2018, it was 30 in 2018. It was 29 in February 2018. You can see how it kind of bounces around. This kind of gauges how much risk people are feeling is taking place within the market. Okay, it's a good indicator for everybody to look at if they want to understand what's taking place. But now, what I do want to point out is this Bloomberg article that came out with regards to housing, and you can see that the median sales price, right? Now, keep in mind, Median is, different than the mean, because if there's really expensive homes and there's really cheap homes, median helps smooth that number out a little better. That's kind of like the middle of the pack. It's like, where does everything in relationship to the middle of all the pricing that's taking place, what does that number look like? And that middle point of all the houses that have been bought and sold, is about a 20% rise to 372 from a year ago. So it's basically, there was 316 new homes for sale in April, and it would take 4.4 months to exhaust. But here's what's interesting: the number of homes fell. The supply shortages help explain why construction fell 9.5%. So a lot of people are saying, you know what, I don't want to build right now, because why should I build if I buy all these materials and I build? What if the money dries up? I'm going to get caught losing a lot of money, right? So this is what's taking place, is that there's definitely concerns, but you can see that the housing numbers fell by 8% in the South and the Midwest, while out West they went up by 8%. Okay, so overall the housing number ended up missing the target. So if you look, the estimate for housing. So if you guys ever want to look, all you do is you say economic indicators today. You look at the data. If you want to quickly look at this, right? You go here, market watch is okay. You can say, okay, what's going on? Well, new home sales were expected to come in at 959,000, almost 100,000 short, folks. So right there, you can see that number is 100,000 below the estimate. This is the median forecast right here. Median forecast, 959. Previous, 917. So you can see it missed the mark by 100,000 homes. That's a really big deal, right? And what that's basically saying is people are staying price sensitive, and as a result, I'm just curious, housing stocks should be up, and they are. Housing stock, like this is one of the housing stocks that's up, and you might ask yourself, why is this thing up, right? Why? Let's take a look at. I'm just trying to think of MHS maybe. No, not that one. Hold on, that's Medco. If you look at let's see, Owens Corning maybe. Owens Corning. I'm just gonna look at a couple companies that might be price sensitive to housing to see how they're doing. So if new housing is coming down, Home Depot is up. Okay, no big deal. I guess 55 basis points is no big deal. Lowe's is up 1%. I guess what I'm saying is, depending on what's going on with housing, if people aren't buying new houses, sometimes if housing sales are coming down, part of it is people are like, okay, well, maybe it's better to just spend some money, stay where I'm at, because the cost is too high. Why should I spend money, pay a realtor? I might as well redo my house. And so that's why looking at how different companies are doing and what their business is doing is beneficial in giving you information as to price signaling. Like, okay, Home Depot and Lowe's is doing really well. And some people might say, well, Bobby, maybe they're busy because people just bought a house, they need to redo their house. And what I would say is that's traditionally not the way the relationship works. However, given the fact that this is definitely a seller's market and people can ask whatever they want, even if the house has a lot of work that's needed, this might be one of those situations where the demand for housing is so high that people are being able to unload homes that need work done to them, so that they do need to go to Home Depot and Lowe's. So you have to remember something about statistical relationships between companies and industries. You have to pay attention to the changes in the information. And part of the information change in evaluating that circumstance or that situation would be to look at what's taking place, that there is in fact a shortage. And so part of these shortages might be created as a result of the crypto markets, right? The crypto markets were worth, I don't know, $500 billion 2 years ago. Maybe they're worth less. And now they're worth $3 trillion. At the margin, the entire housing market of the United States, and once again, folks, I haven't done the adjustment for how prices have changed. You know, the entire housing market of the United States is probably worth 30 to 40 trillion dollars. So 30 to 40 trillion for all the homes in America. So then if you have a situation where at the margin something that was worth 500 billion all of a sudden goes to being worth 3 trillion, all the crypto markets, and those $3 trillion can be used to buy real assets in the housing market, you can see how at the margin that would push up prices, right? Because the elasticity, right? You don't have everybody selling their house on any given month. You have people, it's sticky. People kind of stay in their house, and they tend to stay there for 5 to 10 years. And, depending on what's going on in the job market, each respective state, their income. So this is what's probably been causing a little bit of this boom up in prices, is not just this buy versus build, right? Because right now there's a shortage of homes. So that's a supply issue. So you have a supply issue on homes because there's not enough workers that are trades in the trades. Then you have a situation where the Democrats are pursuing policies to encourage people not to work, right? So then you have a shortage of labor. So you have a shortage of people that want to do physical work, because why do physical work? I could sit on my butt and collect an unemployment check, right? So you have a situation where you have government creating a massive constraint on supply of labor. Then you have markets that are not regulated, the crypto market. You have that chasing all the inputs that go into housing. So then you have, so your labor costs are higher because you can't find workers. Your cost of putting the house up is higher because commodities are being driven up because they're very illiquid markets. And then you have a situation where those two forces are taking place, and then you have a situation where there's a bunch of money that just came out of nowhere, right? Trillions of dollars that some would argue, right? I'm not here to say which one way or the other. You guys can use your own minds. Once again, this is all for educational purposes. I'm just kind of sharing things to think about. But you have a situation where the crypto market is trillions of dollars of, some would say, speculation. There's a lot of speculation in it. I understand the argument both ways. It's speculation. Other people think it's an investment. Other people think it's a sign that they don't trust the government. There's a lot of moving parts, and so it's hard to believe any one of the parts. You got to look at all the parts together and think through what does it all mean. And that's something I get paid to do, right? So I try to think through what does it all mean and how to position people's money in the markets, right? And so some of these things from a regulatory standpoint I can't talk about, but from this perspective, I'm just sharing things that you can think about before you're making decisions, and you want to study these relationships before you put a lot of money on the line, right? You don't want to lose a lot of money. But this whole move last week with regards to stocks, growth stocks going up. Growth going up is a sign that people are less concerned about inflation. Okay, let's make that clear. Growth tends to go up if there's less concern about inflation. The Federal Reserve has signaled that they think they might be able, they might be doing some things that would suggest that inflation should be in check, right? I know there's a bunch of folks that think that the Fed is trying to blow up and destroy the economy. I don't think that way. I don't think there's a conscious effort to do such things. Are there unintended consequences and boneheaded moves because these people are just human? Yes, they do that all the time. Is there this vast global conspiracy to destroy the U.S. and the world economy through the Federal Reserve? No, I don't believe that. Are there people that try to use the Fed policy for nefarious purposes? Yes. So it's kind of like, which one is it? It's like, oh, well, Bobby, you're saying that you don't think the Fed is trying to do all this damage, but then there's people possibly within the Fed as well as outside of the Fed that are trying to use what the Fed is doing for malicious purposes. And what I would say is yes, there's malicious actors that use, lack of understanding by government officials. Right? Sound familiar? We see this all the time in the government. There's a lot of inept people in government, a lot of inept politicians that somehow squirrel their way in, and all of a sudden, as a result of this ineptness, we have a lot of situations where people, are we have a situation where as a result of this ineptness, where we go down a wrong path and it blows up in our face. And what I would say is, this is what we seem to experience, and how much of it's manufactured, blowing up in our face, and how much of it's just because people, you can't talk sense into people, right? Sometimes you can't talk sense. Some people want to do something, they're going to do it their way, and that's just the way it is. And I can live with that. I understand when people feel that way, and I try to arm people with things to think about before they go down that path. All the things that can go wrong. But at the end of the day, I can't stop someone from jumping off a cliff. I'm not going to do that. I'll try to convince them, but and I'm just saying that, not literally, folks. I'm not talking about somebody physically jumping off a cliff, right? You'd want to call support, maybe get a helicopter out there. I'm not sure. You'd have to call somebody on the suicide watch. But sometimes people, they can't help themselves. They feel really bad if other people are making money, and sometimes as a result, they do things that are outside their wheelhouse, and that's a very dangerous line to cross, is what I would say. So for people that are tempted to do that and do that, my advice is real simple. Put as much on the line as you're willing to see go to zero. So it's like whenever you feel like that, risk-taking based, consider how wrong you could be, and how much you're willing to stomach if it's just something that you want to take a lot of risk in goes to zero. And if you do that, I think it'll help keep your sanity, right? If it does go to zero, because then you don't get wiped out. If you go in on the wrong couple things, and it causes a lot of damage psychologically to you as an investor. So anyways, so that's what's going on. Let me see if there's any other news that's worthwhile. Treasuries have definitely strengthened. So once again, the Treasury market strengthening is also a sign that there's less concern about inflation, because Treasuries would be selling off if there was more concern about inflation. So I hope you guys found that to be helpful. If you're in the market for housing, all I can tell you is, just be careful. If you own homes, the one thing I will say, and I hope everybody would go and do this nationwide. If home prices are up 10 to 20%, we, the people of the United States, should demand that our property taxes get cut. We should push to cut property taxes everywhere across the country, because the property tax rates, we should look at it in the dollars paid. So if you're paying your local government 2% of a house, and say it's $300,000, you pay them $6,000 a year. Prices go up 20%. You shouldn't pay them another 2% on the $60,000 or $1,200 a year, $100 a month. You should be like, no. I'm keeping that $1,200. We need to cut the property tax rate down. So folks, get involved. Make sure that you guys take the time to make sure that property taxes, we should be pushing to reduce them nationwide. We shouldn't let them continue to have them stay at the same levels as prices go up. The gain should be ours, not the government's, is my 2 cents. So anyways, Jennifer Lawrence is here, huh? The actress? Is that Jennifer Lawrence? Are we making an appearance with Jennifer Lawrence, or is it a different Jennifer Lawrence? I'm just teasing. Anyways, I hope you guys have a wonderful afternoon, and I'll be back at 8:30 this evening. God bless.